Traders, welcome back to the channel. We're going over the Nasdaq 100, the SP 500, exactly how you're moving. We had our rate hike and we're absolutely getting smacked. What is happening and how should you be looking at the market? Before we go any further, consider liking and subscribing. I'm making videos every single day so you can see what we're seeing in the market, the news so you don't miss anything, tweets, everything like that. All the information is down below as well. So just consider liking and subscribing, helps out tons. But let's get to it. So what we're going to do is talk about kind of what happened yesterday. I wasn't able to make a video yesterday. My computer had a big issue. Had to take it, get everything wiped. Basically, brand new computer now. Added a few parts, so we're back. We're good. Videos be coming out as normal. Sorry again for the delay. I did post it on Twitter. For now on Twitter, make sure you're following me. The big thing that happened going into yesterday was this statement right here. It said raising rates 75 to 1 is not bullish at all. I've been seeing YouTubers and idiots saying this. If everything is more expensive and consumers are buying less of your stock and company's products, theoretically your stock and company loses value due to less revenue. Don't overthink it. Don't drink the Kool-Aid. So if you're not following, I recommend following just because you're going to get those updates no matter what. Now, I'm going to give you some stocks at the end of the video that I'm liking, that I'm looking to play throughout the rest of the week and going into next week and then next month, hopefully, if things continue to go well. But let's get right into the chart. So the first thing I want to talk about is essentially what I said before we even had this rate decision, right? So we know we had the really big one back in March when you had the overall move right here. This is a rate decision back here, and then this was our last one, I believe, around May 4th right here. So these were the two rate decisions we had, and then we had, obviously, the one right here. So I'm going to highlight those three things. Now, what happened? Let's explain, and what's so big about what's happening in these key ranges. Let me make the chart a little bit clearer for you as well. So what we're going to look at is you had that right here. You saw you pumped, you dumped, you came back up, and you ended up running for the next 1, 2, basically 3 weeks on Nasdaq. You ran to the upside. You had a lot of upside going there as well. And then from there, you topped off and you kind of came back down. Now, the next rate hike, what happened here? You had a pump, and then you came back down and you stayed in a trend for 1, 2, 3 weeks, pure downside. What happened here? You pumped, started to dump onto today. What's going to happen? Now, so what we're going to do is look at what's happened on the past cases of this, okay? Let's keep it very simple. What's been happening? Well, this is what's happened on the market. You're getting clear trends being set after this comes out. And what do I mean? So you get to your decision, and then for the next 2 or 3 weeks, you trade in a clear trend, probably trending down now. Now, going into the Nasdaq and going into SPY, things are going to be interesting, and I want to very much clarify how I see us moving. We have big news coming out tomorrow as well, but looking at what's happening here on the Nasdaq, you started pushing down. You can see these are our previous lows that you had back here. You've broken below them, and chances are you might going to come in pre-market, something like that, retest these lows, and then probably tank back down. Now, people were saying, Tyler, why did we pump up? Why did we move up yesterday? And I'm not going to pretend like I can give you every answer you need to know. I'm not going to pretend and tell you, oh, this is why we went up and this is why we dropped immediately. Chances are it was people exiting positions on the derivatives market as far as puts and calls and things like that, readjusting positions, and then you saw that immediate downside coming into today. Now, you're also getting more and more data being released. The biggest point from what Powell said, if you weren't listening to that press conference, I recommend you go back and listen to it. But basically, he said, we don't know what to expect, and we're reacting from each data release. Because if you look at what happened with that 75 BP hike, and you look at kind of how you came out, the consensus going into this yesterday, if you look at it, you can come and look just freely if you wish. Go back to investing.com. It's all there. You can look at previous data. The census was going to be a 0.5 hike, so you're going to be at 1.5. And this was set in stone basically since last week. And then what happened today, or going into yesterday, you had a 0.75. They made this rate change, or the decision to go from a 0.5 to 0.75, essentially over the course of 2 nights. That's how much data is now influencing the Fed. They're not going to be slow anymore. And they probably made a mistake. If they were going to do a 0.75, they should have done a 1-point hike and then been done with it, and hopefully just do 0.5s going forward, maybe even a 0.25 down the road as well. I think that was a mistake. Now they might have to do a 0.75, and now they probably have to do a 0.75 depending on GDP that comes out later on this month as well. These are all big, red flags coming out. Today you had some more data being released, and it wasn't good either. Building permits way down. The housing market's getting slapped. 14% right there on housing starts. Jobless claims, again, bad, just bad kind of coming out across the board. That was not very good. Now, tomorrow morning, you're going to have Powell speaking. They say at 8:30 Eastern. I don't know how true that is. The thing that will be released that's big going into tomorrow will be this right here. And there's not a specific time. It's a monetary policy report. I wish I could give you a time, but I assume Powell's going to release that when he talks going into tomorrow. They have him talking at 8:45. I can't give you an answer specifically when he's going to do that. I recommend being on Twitter. If you're on Twitter, the guy I recommend, I have no tie with this guy. I'm not sponsored. I just like his overall census. I like the data he gives out. It's very accurate. Fast stock market news, very good source of data. I just turn his notifications on. And typically I'll get that as it comes out because he's wired to the Bloomberg terminal. So that's really good there. So you're going to have Powell talking and you're going to have that monetary report. And I just don't see that going well. They said inflation's hitting us. They tried to say a soft landing was still possible, which Powell was very reluctant to say. But let's look at the charts because let's see where I think we're going, right? So today, basically what I was looking at, and this is the 15-minute chart, was clear downtrending on the Nasdaq, and I was just trading to the downside. Personally, in Discord, what was I looking at? Let's just give you a clear look. I want to be very transparent here. Obviously, me trolling as well. What we were doing, we got into Tesla puts very early this morning, around 12. No, it was actually around 9 o'clock. Yeah, you see 9 a.m. right here, 30 minutes in the market, 600 puts for next week, $12. I ended up closing most of those. I closed half of those around $16, and then the rest I closed at around 20.5. Those ran absolutely rapid, almost 50% profit. No, sorry, around 75, 80% profits on there. Also had Google's as well, ended up closing those, making a decent sum as well. But essentially what I was saying though is, you want to spot the trend. And now we have the trend, guys. We have the information we need. We know where we're moving. We know how we're moving. And chances are it's more towards the downside. What I'm looking for here is going to be a retest of these previous lows, probably in pre-market after hours as we're seeing right now, a rejection, and I want to see us break down. Now, I'm very shocked that you have not tested 11 flat. I am actually like flabbergasted, whatever the word you want to say is. I'm shook that we did not tested that yet. So I think that is definitely coming and definitely in the works. And when you're coming back to look at these, it's really hard to find these levels now. So when we're coming back, we're looking all the way back at 2020, and you're trying to find previous levels you're kind of holding. You're holding those 2020 highs from July right now, and it's just kind of struggling. So what I'm looking for more is going to be the lows down here, and hopefully you kind of get some support around 10.7, 10.67. That's where I kind of see us coming down to. So far, you're holding the lows of around 11.01 roughly, but I don't think that's going to hold too much longer. But what's good to know if you are on the long side of this, which I don't recommend being, not financial advice, but you are seeing a little bit of a bounce, but what you want to see is a rejection at this range. So pushing back up like this, coming, rounding off, and then hopefully coming back down to that 10.7 range is what we're looking for right now. Now, if you've been with me, you've been seeing I was calling for a 360, 365 touch. And ladies and gentlemen, you got it on SPY. You're looking to get a little bit of a bounce here. You're trying to hold this bottom here as well. And it's getting tough. I'm not going to lie to you guys. It's really tough down here. You can't break above VWAP. You barely can hold 9 MA. Everything's very, very weak. So I'm not feeling confident there either. Maybe a test of the daily and pre-market posts. It's just, there's nothing really going on there. You saw volume ramp up, but you saw sellers take control there as well. Again, when we look at something like Bookmap and looking at the overall volume, it's just nothing great in my opinion. As we come back and as we look at this, you saw a lot of chop on the day on the ES, and you saw you just break key levels time and time again. CVD continuously coming down, and ultimately buyers were nowhere to be found. These wicks look pretty decent, but they're very, very small to the buy side. 200 lots was the biggest order you got here on the icebergs. Very minuscule when you're looking at the big picture on what we were seeing on the previous dip buying happening. So as I'm looking here, I don't like to see that. So what I want to do is actually go over and show you some charts that I am liking. But what I want to do is go over some plays that I'm looking at and things that I'm liking for more downside potentially if you start getting the setup that we're liking. But there's always going to be key points you need to be looking at. So make sure you're paying attention. This doesn't mean just jumping these plays. These are my targets. First thing I want to talk about is Google. This kind of freaked me out for a second. Looking at post-market, you're at 2165. That's not true. Had to check. Yahoo Finance, you're at 22 right now. What am I looking at? Now, you are getting a futures bounce right now. So I want to address that. What I'm looking at are these previous lows you have formed right here. You broke through them today. Immediate downside. That was the trade that we were looking at, what we had. I'm looking at a rejection of this range of 2120 and a push down to 2090 and then the lows of 2045. Now, the going trend of what I'm looking for are test of these previous lows you had back in May. So I'm looking at a 2040 test on May. So you do have a split coming up, but that is in July. So I'm looking at that first level, 2090, then around 2040. But what you're looking at is for confirmation holding below this range going into tomorrow. If I'm having stops, it'd be probably right above VWAP around 21.3, and you're looking for a breakdown. I'd get a little bit of data on those as well. Personally, I'm liking the 2,000 puts for next Friday, but that's something that I'm looking at personally. You got to play it by ear. So basically what you're looking for is a hold below this range. You do not want to see you get above this weekly here. If you get above this weekly range, the trade is off. You're not looking for it at all. But as long as you hold below this weekly, you're looking very strong to press down hard. So that's what we're looking at there. Next one up, I want to talk about Tesla. Now, Tesla was interesting, and you got a really nice bounce to end the day, something I did like to see. So Tesla was the trade. Obviously, we traded all day, trading that downside. That slippage just never had strength basically until the end of the day when you broke out right there. What am I looking at? Now, you did come down and almost test those lows. Very close to 622. Very, very close. We got out of this around 2021 a contract at the tip, and then you came back up. So I like this maybe for a retest of 644. I'd be looking for possible put entries around that region. Again, you need to come out and see how we address the Fed and how this comes out. If you start to mount VWAP, I wouldn't like this trade as much. You're seeing a little bit of a hold above these previous lows. You had a rejection and then you had a slight push at the end of the day to get you over the hump. But I'm looking for puts around the 644, 645 region. The lows around this level as well. We had chop coming in today even. So I'm thinking that's going to be a pretty big level, and you're looking for a break back down, 620, possibly making new lows, which you need to know there's no liquidity down here basically until you get down to about 55, 560 overall. So those are things you are looking at. The next one up is going to be one of our favorites, and shout out to Jay Ream for this one. Jay Ream is actually working on his YouTube right now. They'll be giving you guys content as well. This is going to be the big one and something we're going to be talking about for the next few weeks, and it's John Deere, something we really don't talk about here on the channel. I'm going to go to the 4-hour chart to give you a better look. This is basically how John Deere has been trading, nothing but to the upside. You're basically trading at this range right now. Now, typically, you would want to go for those lows right there. But what Jay Ream is looking at specifically is a break of 308. So once you break this level right here, you have no liquidity. You can look at the liquidity walls. You can look at the buy orders. There is nothing down here ultimately until about 270. And then the next one's around 240 overall. So it's no man's land past that area. So what am I looking for here? As we come back into about the 15-minute, what I'm looking for and what we are looking for in the Discord is a break below 307, 308. Once you get below this level, I would have moderate stops, maybe up to around 310. Dated on these, about 250s going into July, maybe even August, and you have tons of room to the downside on those put options. You're looking to overall spot things during this trend and to ride these out. That's the way you're going to maximize profits. It's not just, I'm not a guy that's going to go into SPY and Qs and try to just trade the chop up and down, up and down. That's not the plan here, guys. The way you're going to make money in this market is riding and finding the key trends in the market, and ultimately, that's my goal. So again, what am I looking for going into tomorrow? I'm looking for puts if we can stay below this region. If we get above this region, 11.25, I don't want puts. I don't want to touch anything. I don't want to touch it at all. As long as you're above that region, I don't want to hold. If you get rejected here, it's put city. You're looking for downside on the market. Nasdaq, it's all you need to know. As long as you hold below this region, you are bearish in my opinion. On the S&P, what am I looking at here? It's about the same thing, same overall price action. I'm looking for this region right here. As long as you are holding below this level around 370 roughly, I am bearish on the market. As long as you hold below that. You hold below your previous lows right here. You can see that region here to here. As long as you hold below that level, you are bearish. You get above it, I'm not looking for puts. I'm not really looking for calls. Maybe start to fill that gap up here. Not really that interested. But overall, that's what I'm looking at. I think downside could be absolutely catastrophic with the way the Fed is handling this, and the way that they are approaching the market is extremely, extremely worrisome. So be careful.